All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. A lot of interesting stuff out there today in terms of just some of the price action. We're seeing some continuation of the bullish rotations that we have seen, and we saw an article come out this morning from J.P. Morgan. I'm saying if it's on Market Watch right now, and I'm not seeing it on here, but basically this morning, J.P. Morgan came out and talked about buying value stocks and that investors were looking for value stocks in this market and that they would continue to do so. And you don't hear that very often. You don't hear the term value stocks. You don't hear this idea of value stocks. It's normally momentum, momentum, momentum. The big momentum names. That's where the money's going to go. But hearing this talk of value stocks, really interesting and something that I think we can really see when it comes to the challenge watch list. And what do I mean? Well, let's take a stock like FedEx, coming off of a low, right? And beautiful move. Just absolutely beautiful move here for the stock over the last 2.5 weeks. Alcoa has been absolutely drilled and beautiful move here of late. Valero, right? We got a buy signal on Valero, and then the market turned, right? We ended up popping out right here, and it had a few bad days, pushed all the way down to 72, new short-term low, so we didn't get a signal on this 3-7 crossover. But since it's had the crossover, it's been straight up. When you go and you compare a FedEx or a Valero to something like a Microsoft, for example, that, let's face it, Microsoft is outperforming this year. Microsoft has seen a lot more money come into it this year. You could argue much better fundamentals. But what doesn't Microsoft have? Microsoft doesn't have a great valuation metric. And one of the things that we have seen over the last 3 weeks is that stocks with good valuation metrics have been bought up, and stocks that are pretty expensive, even though they may have awesome revenue growth, like a Visa, they failed to really see significant money flows come in over the last month. You look at a Caterpillar, boom, it finally pushed into a little bit of valuation range. And since then, it's been pretty much straight up. Bank of America, well, we've talked about the valuation range on Bank of America a lot. And down here, 26, the valuation is just very strong. It's, moved on up. And a lot of people are going, well, why would the banks move up and blah, 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 and all that. The bottom line is the price action has sent them higher. Today, there are no 3-7 crossovers to the upside for the challenge. There's one to the downside for Twitter, but it is not signaling bearish here today. So nothing for me to get into, and that's aggravating. I would like to be into something. I would like to be trading something and running with some positions here, but no fresh crossovers going on. It sets up pretty well for the start of the next challenge. And what do I mean by that? Well, something like a Caterpillar, right? It's going to need a little pullback, to give some sort of buy opportunity, and most likely because of the strength of the rally, isn't going to give a sell opportunity on the downside 3-7. But some things like Microsoft, things like Visa, some of these stocks that have been lagging, and there are quite a few of them out there that have finally gotten some pullback in them. Even a Disney, for example, will be in positions to where we probably are talking about some 3-7 crossover action going back in them. But what are they going to need? Those names that I just mentioned, they're going to need to see money rotating into momentum, right? They're growth names, right? They're the Disney. It's a growth name. A Visa, growth, right? They're all about the growth element, and a lot of the stocks on the watch list are about the growth element. But when it comes to what this market is buying, it's buying value. And so I decided I'm going to go out and take a look at value stocks here with you because I don't think this is over. I don't think the value hunt is over. I think we will see, a flip-flop back and forth from value to momentum and momentum back to value. But there's enough value in these value plays to argue a significantly greater move higher in a lot of these names. Now, when most people think of valuations, they think of price to earnings, right? I'll take a look at a stock, look at the price of the stock, divide it by the earnings per share, and it's going to give you this magical number that's supposed to be between a certain range. And if it's between a certain range, it's cheap. And if it's, too high, it's expensive. But what you tend to find is with PE ratios anymore, it doesn't mean a hill of beans. It doesn't mean anything. A low PE ratio, a lot of times, hey, that's the stock's getting sold. For example, if we come in and take something like a U.S. Steel, right? U.S. Steel's had a very low PE ratio. The PE ratio's at 2. It doesn't get much lower than 2. When you're talking about the average market PE ratio, somewhere in the 17 to 18 point range, and U.S. Steel is trading at a price to earnings of 2, they don't get much cheaper. Right? They just don't get much cheaper. But PE ratio on U.S. Steel has been really low for over a year, and the stock is down over 50% in that time period. PE ratio, bottom line, it's not really being used much. It's not something that, investors are making major decisions on. And for a number of reasons. One of the biggest ones is it can be manipulated more than other things. And as the years have gone by, we have seen investors shift from PE ratios and looking at earnings to looking at sales. You can't hide sales as much. Right? Your revenues are either going up or down. You can't, defer a lot of revenue to different quarters. You can somewhat, but you can't get all these write-offs and everything. And when you look at a balance sheet for a company or an income statement for a company, right? First line is always sales or revenue, right? And then you get depreciation, you get taxes, you get write-offs, you get all these other different things that filter down into earnings, right? And so as you kind of affect some of these other elements, it affects the earnings, but doesn't affect the sales. And so sales are a lot more of a pure way to really look at a company. And that is one of the reasons why we've seen companies like a Microsoft do so well. Well, their sales growth has been phenomenal, right? Their sales growth has been really good. Well, what if we could take the sales element and put a value metric on it? All right, well, let's do it. Let's take the price of the stock, just like we did with earnings, but instead of dividing the price of the stock by earnings, let's divide it by sales. We're going to be able to do the same thing that's historically been done with earnings. And look, it's been done price to sales for many, many years. But if we start to take a look at it from this standpoint, can we start to go find some really good value in the market? And the answer is, yeah. We can start to see some value out there. So let's go do it. I'm going to come in here to just FinViz. Why? Free, easy to use. And I'm just going to come into their screener and going to come down here to all. And we're just going to go screen a couple things. I'm just going to take stocks in the S&P 500. Okay. And going to come in here to a price to sales over here and say, let's find price to sales that are under 5. Right? So if you take the price of the stock, divide it by the sales, it needs to be under 5. And what do we notice? 385 of the companies are below 5. Okay. That doesn't tell us a whole lot, right? let's come and shift this a little bit. Let's go and just take a look at those that are over 5, right? Just so we can kind of get a feel for those types of companies. Who do we have in here? The Adobes, right? High sales growth, but expensive, right? We have AMD, high sales growth, expensive. And I'm just looking at just some of the stocks that are on the challenge watch list here for this. But Amgen, if we come in here, we have, let's see who's on the challenge watch list. Nobody here, but CRM has that kind of same element as Adobe. If we keep coming through, there's Facebook, right? Price to sales is high. Google price to sales is pretty high. These are some big names, some big companies, some of the best. Coca-Cola, MasterCard, price to sales high. Microsoft, price of sales high. Netflix, Nvidia, right? All these companies have pretty high price to sales, right? Now, they're justified with that. Why? Because, well, they've had some fantastic sales growth. We come in SBAC, heavy price to sales, and you'll notice what it's done. I mean, if we look over the last week and a half, 2 weeks, it has really struggled. We come in here and go one more. Here's Twitter, which we're seeing pull on back over the last 2 days. Union Pacific, which has lagged a little bit. Visa, which is struggling over the last few days. We're seeing some of these stocks with high price to sales, like Yum Brands. They're all pulling on back. They're getting sold. Okay. Well, let's go take a look at lower price to sales. I'm going to come under 1. Let's just go get real cheap. And you'll notice there are 89 stocks in the S&P where the price to sales is below 1. That's a big number. that number feels really big. But take a look at the charts and what they're doing. Here's Alcoa. Look at what it's been doing while Visa and Microsoft and Adobe and some of the other higher price to sales have been falling. Did anything change? Did Alcoa magically change overnight and now Alcoa is a different company and their revenue projections are different and their sales projections are different? No, not at all. We haven't seen anything that is game-changing news-wise with them. Keep on coming down. Right, some other stocks that are on the challenge watch list. Costco's not on the challenge watch list, but let's see here. Yeah, none on that list. Oh, American Airlines, right? I mean, you look at American Airlines over the last 3 weeks, and you look at Delta, and American's had a much bigger run than Delta. Well, it has a really cheap price to sales. Here's Delta. Its price to sales is pretty cheap. Americans is better. But here's Ford, right? Ford got hit pretty hard yesterday on some news, but over the course of the last few weeks, it's done really well. FCX really come off the bottom hard. FedEx, this is a monster move for FedEx. It's gone from 150 to 175 in a couple weeks. UPS hasn't done that. Here's General Electric, which isn't on the challenge watch list, but this stock has rallied, almost 20%. General Motors, big upward move. Halliburton has finally come off the bottom. It was down at 17, now trading at 20. We're talking about a 15% move? We're talking about some heavy moves off the bottom for these cheap price to sales companies, right? And it's not everything all over the place, but here's Nordstrom. Boom. Kohl's, boom. Right? Lennar, boom. These companies that have the cheap price to sales, these are what have been bought up over the last couple weeks and that continue to get bought up here today. So while, we could talk about, some of the best, and a lot of these aren't going to lie into that category, right? Nucor has some fundamental issues here, but whatever we say about earnings, whatever we say about some of the fundamental issues, whatever we say about the projected sales going forward, based on sales right here, right now, the price of the stocks are pretty cheap. Target, very low price to sales. We have UNH, which I was surprised to see on this list, has some other issues. But, it's one where this low price to sales, here's Valero, here's Walgreens. These stocks, Whirlpool, They have had monster moves, and they're all trading with price to sales under one. That's just a very low level, a very cheap level, and one where you compare it to the Googles and the Microsofts and the Facebooks of the world. They're all trading up above five and really hefty price to sales levels. And the bottom line right now, where is value money going into? It's not going into companies because, well, you know what, something's going to change in the future. It's just purely going into companies with this really cheap price to sales, where, you know what, bottom line, yes, if you look at it from a price to earnings standpoint, you can say this thing looks kind of expensive. Valero's not in that bucket. But you look at Lennar, you look at some other things. Their price to earnings can be pretty expensive. But when you get into them and dig into the price to sales, that is the trend that we're seeing. That is the differential that we are seeing here, is that price to sales are being bought up, not price to earnings. And when investors are looking at value, that's what they're looking for. They're looking for that price to that price to sales. And some of the best stocks in the market this year have been pulling on back. Coca-Cola, finally pulling on back. Pepsi finally pulling on back, while some of these value stocks are kicking into gear. Will we see a shift again? Yeah, we absolutely will, right? If we get some sort of trade resolution, or another rate cut or something like that, you're going to see the market have excess money, and it's going to go chase revenue. If there's any glimpse that economic data is improving, it's going to go and chase revenue growth, right? But as long as the market kind of remains the way it is right now, and the undertows the way the market is at this moment, this price to sales is going to be a continued chase. Now, does that mean I go out and just buy Valero willy-nilly right here, right now? No, it doesn't, right? It doesn't. I still have to wait for, good risk-reward scenario, good signal, and all of that jazz. But this is the value hunt that we are seeing in the market right now, and the value hunt that I expect will continue, right? But also keep in mind, this type of move, it's changing the fundamentals a little bit, right? A 10% move in the stock now, it's nowhere near as cheap as what it was from a valuation standpoint. And, you have to kind of, take that into account, where you go take a look at a Twilio, which has been very expensive. Well, it's a heck of a lot cheaper than what it's been, and ultimately we'll see a rotation back. We'll see these higher or these lower price to sales, take a breather, while some of the Twilios and Microsofts and Adobes, go ahead and take the lead on back. All right. So again, no 3-7 crossovers for the challenge to even consider here today. So going to continue with cash. Not my favorite position, but is where it is, and we'll continue to run with cash as long as as long as we don't have signals to run with here. Okay. Thanks for hopping on. Have yourselves a fantastic evening, and we'll talk to you tomorrow. Take care.